All right, welcome to Talk Tickers. Today we're digging into lidar leader Hesai Group because their last earnings report was a real head-scratcher. I mean, the company posts these fantastic earnings, and what does the stock do? It tanks. So what on earth happened here? Let's get into it.
So here's the paradox right up front. On the surface, everything looked incredible. Hesai comes out with official GAAP earnings of 25 cents a share. Now, you gotta understand, that's more than double what Wall Street was looking for. And for a minute there, the stock popped, right? It was up over 5%, but then a complete 180. By the close, it was down almost 10% on massive volume. Just a brutal reversal.
And that right there is the billion-dollar question. I mean, when a stock sells off hard on what looks like amazing news, you know the market is digging deeper. It's looking past the big shiny headline number. So what did Wall Street see that totally spooked them? Let's peel back the layers.
Okay, to figure this out, we have to look past that huge EPS number. We've got to dive into the nitty-gritty of the quarter, because, the real story is always hiding in the details.
First off, let's talk about the good stuff, because man, there was a lot of it. Check this out. Total lidar shipments just exploded. We're talking up 229% year over year. That is the definition of hypergrowth, the kind of number that usually gets investors drooling. It screams that mass adoption is happening right now. And get this, it gets even crazier when you look at robotics. Shipments for robotics applications up over 1,300%. So you see, this isn't just a car story. This is about the entire autonomous future, and Hesai is just aggressively grabbing market share. But, and this is a big but, here's where the plot thickens.
Okay, now look closely at this table, specifically that gross margin line. See, even though revenue shot up by almost 50%, their gross margin actually got squeezed. It fell from nearly 48% down to about 42%. And for Wall Street, that was a huge red flag.
So when you put all the pieces together, here's what the market was really looking at. Thing one, a slight revenue miss. Not huge, but a miss is a miss. Thing two, that margin squeeze we just talked about, which happened because they're selling more of their lower-priced units. And thing three, and this is the kicker, that huge earnings beat was padded by a one-time gain from selling an investment. You take that out, and suddenly the beat doesn't look so spectacular anymore. And that is what flipped the script.
But, despite the market freaking out, Hesai's management got on their earnings call and painted this incredibly bullish long-term picture. Their vision is really compelling, so let's hear them out. Let's look at their side of the story.
And this quote from the CEO, David Lee, is really the core of the whole bull case. He's saying that as we move to level 3 autonomous driving, where the car is basically driving itself most of the time, he expects to see not 1, but 3 to 6 lidars per vehicle. That's a system value of anywhere from $500 to $1,000 per car. We're not talking about selling one item anymore. We're talking about selling an entire suite. It's a total game changer for how much money they can make on each car.
And look, this isn't just some pipe dream. They are locking this future in right now with huge strategic wins. They've got an exclusive deal with the EV giant Li Auto. They landed a new design win with another top 3 domestic automaker. They're expanding deals with robotics pioneers like Pony.ai. This is exactly how you build a fortress around your business.
And then, to top it all off, they gave really strong forward guidance. They're projecting a massive jump in revenue for Q4. And, you're going to love this, they actually raised their full-year profit forecast. Why? Because they already hit their original target a whole quarter early. So management is clearly firing on all cylinders, which, makes that stock drop even more baffling, doesn't it?
All right, so let's take a step back. We've got this incredible long-term story from the company clashing head-on with some very real, very immediate concerns from the market. So the question for us is, how do we put all this together and come up with a solid take for the next call?
Okay, after weighing everything, the good, the bad, and the confusing, our rating for Hesai is market perform. Let me walk you through why.
Look, on the one hand, you have to respect the bull case. These guys are the undisputed global leader. Their guidance is rock solid, and those design wins give them visibility for years to come. But you just can't ignore the bear case. That margin pressure is a real issue. The brutal sell-off tells you investors are jumpy. And let's be honest, the stock had already run up almost 300% over the past year, so it was kind of ripe for some profit taking. Right now, it feels like these two forces are in a tug of war.
So if we're calling it market perform, what do? We don't just sit on the sidelines, right? This is where we come up with an idea for the investment committee, an outlier bet that's designed to play this tricky setup.
Okay, so here's the trade idea.
Here's how we think you can position yourself for what might happen next.
So the idea is to use options to basically sidestep all this short-term noise, while keeping your sights set on that long-term prize. Specifically, we're talking about selling some near-term, cash-secured puts below where the stock is trading right now. Now think about what this does. One of two things happens. Either the stock stays above your price, and you just get to keep the cash, the premium, from selling the option. It's like getting paid to wait. Or the stock does fall and you get to buy it at that lower price you already decided was a great entry point. It's a clever way of saying, yeah, I totally believe in that long-term L3 future, but I want someone to pay me while I wait for a better price to get in.
So I guess the big question heading into the next quarter is this. When does Hesai's incredible growth story finally start to outweigh the market's fears about profitability? It's that classic Wall Street battle, right? Long-term vision versus short-term fear. And one last very important thing. This is not financial advice. This analysis is purely for informational and educational purposes. You should always do your own homework before making any investment decisions.